Hello and welcome back to the Note. April is over and it has been quite a cruel month if you were following any of the financial trends that were in place as the month started. We've seen a remarkable rebound for a number of emerging markets that were very much in the doldrums originally, not just China, which has been quite famous of course, but also Brazil and Russia, up well more than 10%. And you've also seen a correction in the dollar. It's now back down to its 100-day moving average, according to the trade-weighted index. Today, the only really significant news, I suppose, came out of Japan, where the Bank of Japan decided not to do extra stimulus, as some had hoped. The stock market didn't like that. The Nikkei had a bad day. In the US, we had another round of earnings announcements, and we're now at the point where the blended earnings forecast, that's the earnings that have already been announced, plus where the forecasts are for those that haven't, is actually positive, according to both S&P Capital IQ and Thomson Reuters. At the beginning of the month, before any came out, there was an expectation for a fall of 2.8%. Now we're on course for a gain of 0.4%. In that context, it's perhaps a little disappointing that the gain for the S&P over the month was less than 0.5%. Part of that was a correction for technology companies led by Apple, whose market cap, since it announced better than expected results 3 days ago, has fallen by more than $50 billion. Now, let me take you through perhaps the two most interesting landmarks of the day. First of all, let's take a look at US unemployment insurance claims data, basically a count of how many people are being laid off. And this was the lowest number since early 2000 that was reported for last week. Very impressive, as you can see also. The trend similarly suggests that there is at least some underlying strength in the US labour market at present. We will see how that is borne out by the data we get later on in the week. Now let's take a look at German Bund yields, and we are now at the very exciting point where a 5-year German Bund will actually pay you a positive yield. Okay, it's only a yield of 0.005%, but it's still positive. We are no longer at the point where the German government expects you to pay to lend money to it. There is a very startling, very quick rebound that we're seeing in bond yields across Europe. That's because concerns about Greece continue to reduce. That's also leading to the strength in the euro and the weakness in the dollar. That may in turn have its own knock-on effects elsewhere, but that's the situation we have as the month comes to an end. Quite a number of trends that were very strong in the first few months of this year have been turned around.